Buying goods at a market in Brazil, trading energy in the Middle East, or investing in real estate in Tokyo all share a strange commonality. They almost always require the US dollar. Nearly every central bank on Earth holds it as their primary reserve, and it serves as the mandatory pricing metric for the world's most critical commodities. This creates a unique situation where a domestic policy decision made in Washington can legally and financially bind citizens living thousands of miles away. To understand how this single currency captured the global economy, we have to trace the system back to 1944 and the ashes of a world war. As World War II drew toward a close, Europe's economies were largely devastated. In contrast, the United States emerged with its industrial engine operating at full speed. America held a massive advantage over the rest of the world. At that time, it controlled nearly 2/3 of the planet's official gold reserves. To build a stable post-war economy, representatives from 44 countries met in Bretton Woods, New Hampshire, to engineer a new financial order. The delegates reached an agreement that would define the next century. They made the US dollar the world's official reserve currency. Other nations accepted this because the dollar was pinned to a physical asset. 1 ounce of gold was exactly $35. With it anchored to gold, other countries could safely tether their domestic currency directly to the dollar. In this era, international trust was placed in the physical gold sitting in American vaults. The paper dollar functioned as a reliable receipt for a tangible metal. By 1971, that foundation fractured. President Richard Nixon abruptly ended the dollar's convertibility into physical gold. This introduced the era of fiat money, currency backed by government decree rather than a physical commodity. Without a gold anchor, the dollar should have logically devalued, leading to a loss of global influence. Instead, the dollar's role in the global system actually expanded. The currency's survival without gold depended on whether the United States could link its value to a different, non-negotiable resource that every nation on Earth required. In the 1970s, that resource became crude oil. The US government negotiated agreements with major oil-producing nations to ensure all oil would be priced and sold exclusively in US dollars. This created a mandatory trade loop. To power its industry, every nation first had to acquire US dollars. Central banks worldwide stockpiled American currency, which then flowed into corporate invoices and government loans, making the dollar the default language of global trade. By tying the dollar to oil, the US transitioned its currency from a receipt for gold into the essential entry ticket for the modern industrial world. Today, the dollar has moved past commodities entirely. It is now supported by a massive, invisible infrastructure. This infrastructure includes the world's largest consumer economy, highly liquid financial markets, and a global military presence that protects major trade routes. This provides the United States with exorbitant privilege, the ability to issue debt in its own currency and finance large deficits at uniquely low costs. These treasury bonds are considered the world's safest asset. During a global panic, international investors often rush to buy this debt, even when the crisis starts in America. Modern money operates on trust. The global market depends on the belief that the American institutional system will consistently honor its promises. That trust is being tested. Nations like China and Russia are building systems to bypass the dollar, while new digital currencies offer alternatives to the traditional banking grid. This coalition of nations is actively exploring trade in local currencies and increasing gold reserves to build an alternative financial architecture. However, unseating a world reserve currency is not as simple as launching a new alternative. A challenger must first provide decades of proven credibility, massive financial depth, and long-term political stability. The dollar remains the primary foundation of the global economy. Replacing it requires more than just a new currency. It requires matching a complete institutional system that has yet to see a comparable rival.